Hi everyone, welcome back to my channel. If you can tell there is a difference in my camera quality, that's because I am not filming on my iPhone today. I am actually filming on a camera. So it is my birthday this month and my siblings and my boyfriend have pitched in together to get me a camera that I was going to get myself once I hit a certain target for this YouTube channel. So thank you so much. I am so grateful for this generous gift and I couldn't ask for anything better. So thank you so much for loving me, and yeah, thanks for this equipment so that I can produce better videos and better content for all of us out here today on Suyin Ong and our channel. Okay, so before I jump right into the video, I want to announce that I am doing a giveaway with collaboration with ringgitoringgit.com, and Soraya, who is the writer behind the website, has been, well, she's impacted my life a lot in this year of 2019, and I just want to give her a shout out and thank her. Thank you, Soraya, for pushing me beyond my comfort zones and encouraging me to expand and upskill. So that's why I'm doing the giveaway, to connect better with my audience and to let more people know that I am doing this thing on YouTube where I am talking about money and investing and sharing my journey with all of you, and hopefully being able to help each other out on our respective journeys as well. So this is what I'm going to be giving away. It comes in combination to one lucky winner. First is The Richest Man in Babylon. I created a video a couple months back about the 3 books that we should read if we wanted to begin investing. So this book has been super impactful in my money journey because it's very powerful and it is very reading friendly because it's in story form and it is fiction, but it has very powerful lessons for all of us to learn from. So that's this, and this one is actually the Muji 2020 planner. I've been using Muji planners, not this one, but like the smaller version of it, for the last 2 years, and it has been very helpful. What I like about it is that it is, well, first off you have like the, let me just show you. Okay, you have like the monthly spreads in calendar form, and then you also have like the daily spreads, and next to it you have the very nice small boxes where we can write on. And after all the dates are done, they give you just a couple of pages of just the same small mini squares to write on. And this is so handy because, yeah, it's just really handy if you are the kind of person who likes to write things down. And there is power to penning down our thoughts and penning down what we need to do, like to-do lists or time blocking. That's really great. These are brand new. I bought them myself. And I love to purchase things in advance, so I thought, yeah, why not give this to someone who is going to probably enjoy them more than me, because I already have this in Kindle version and I bought another to give away to friends and family. And this one, yeah, it's brand new. Bought it myself. So yeah, this goes off to a lucky winner. I will link the giveaway down below, so please check it out if you're interested in winning those 2 items. And good luck. We're gonna continue the series today on stocks, and today's video is all about how to analyze a company from a beginner's perspective, because it is very intimidating to start analyzing companies, and that's the part that usually when we are on the first part of our journey, it is the hardest part, I think, because it's kind of intimidating, and that's why we are doing this video today. So in the previous video we talked about how to pick stocks. So if you have done that activity where you pick a stock based on BUM, which is you are investing in a business, not just a stock, and we are looking at businesses that we can actually understand, that are within our circle of competence. And the third one, the M, is we need to look at businesses, or we would like to look at businesses that their products appeal to the masses. The reason why I talk about this is because they tend to be market leaders, and market leaders are the ones that tend to grow really big in size over time. So there's that growth prospects, and market leaders tend to, but not always, give good dividends as well. So once we get over that hurdle and we've picked out a few companies that we are interested in looking at, what we next need to do is to analyze these companies, and this is a very important part of our next step. So in order to analyze the companies, what we can do is we're going to become experts at Ed Sheeran's albums. So that's a weird way of looking at it, but Ed Sheeran, the singer, his albums, I noticed, are very mathematical. There's plus, divide, and times. I don't think there is minus, but it is basically that is what we're going to look at today. Where in order to become a successful investor, we need to be able to speak the language of business, which is math. And if you are anything like me, growing up, math was not really one of my strong suits, and I guess maybe that's because I didn't connect math with everyday life very well. But growing up, what I've noticed is that it's in our lives every day, and it's okay if we're not good at it because we have technology to help us along the way. So we have calculators for that, and all we need to do is really just know how to plus, minus, times, and divide, and we're good to go. Okay, so let's talk about how to analyze a company through looking at their numbers. And because we are just starting out, we want to make it as simple and as easy as possible. So we're just going to focus on 4 numbers today. So the first number is revenue. And when we are looking at revenue, this is just the biggest number that we're going to see usually. Yeah, okay, no, there are other bigger numbers than the revenue, but it tends to be the number that the company really talks about a lot. It's their bragging number, and what it is it's sales. Let's have an example, okay? So we're going to be talking about a brand that is known worldwide. So let's talk about a food brand. Let's talk about Nestle, right? Because they're very prominent in so many different countries, including Malaysia, so let's talk about them. So Nestle's revenue, I'm gonna need to go and get my phone so I can get this data, so just wait one second. Yeah, so I'm looking at the KLSE app. It looks like this on my phone. So it's that one right there. And we're looking at Nestle. And we went to the financial report section. Is it gonna focus? Yes. Hey, that's fantastic. And we're looking at annual, so I click annual instead of quarterly. So what we can see here is that in 2018, Nestle did 5.5 billion in revenue. So what that means is Nestle has a lot of different products that they sell in their brand range. So let's assume that they only sell one product, Milo. Milo is priced at whatever price they price Milo at. Okay, this is a telltale sign that I don't do the shopping for Milo in my household. So it's priced at whatever price times the number of quantity of Milo packets they can sell in the whole year. Price of the product times quantity sold, then we're gonna get revenue. So this number is huge, and it is the bragging right of the company, and it is also known as sales or turnover. I think they also call it top line. So revenue, very important. Have a look. If you have your list of companies, check out what the revenue for that company is. Okay, the next number that we're going to look at is net profit. So net profit is known as profit after tax or net profit. So why this is important is because revenue is just a huge number. What we really want to look at is how profitable the company is, and just as how easy it was to pull up the revenue of Nestle, I can see straight away here that they also show what the net profit of Nestle is, and it's 658.9 million. So as you can see, the revenue was huge. It was in the billions, right? And net profit is going to be smaller because there are costs involved in running a business. There's marketing. Again, with the costs, they have people to pay, machinery, equipment, And also, if you want to get into real detail, there's also depreciation and amortization and taxation when it comes to determining the net profit. So we will discover those in a later video because today we want to keep it as simple as possible. So yeah, net profit. The third number we want to look at is the net profit margins. So margins is super important when it comes to businesses, and it is easy to determine the net profit margin number because we already have our net profit number divided by revenue. That will give us the net profit margins, and margins just tells us about the profitability of the business. So if the business is able to command a really high price for their goods and they are also able to maintain lower costs for their goods, they tend to be more profitable with a higher margin, and that is really great news. Something to note is that according to different industries, there's going to be an industry standard. A good way to look at it is if we're looking at fast-moving consumer goods, also known as FMCG, we want to look at companies within that industry and to see what range of net profit number is present. So Nestle would have its own number for net profit. Fraser and Neem, actually I might be butchering that. F&N will have its own number, and yeah, other companies like Dutch Lady will also have its own number. And again, because we are obsessed with looking and comparing with different companies across the same industry, check out who is the market leader in this particular sphere. After net profit margins, the last thing we're going to look at today, the fourth number, is dividends. Because as a value investor or a long-term investor, it is my personal preference to invest only in stocks that pay us dividends, and that there are a number of reasons for this, but the main reason for me is because I really enjoy that dividend check. Every time I get one in the mail or I see it in my bank account, I'll be like, yeah, that's feedback that I'm actually generating some passive income or some income back from my investments. And what I do personally is I reinvest that money. I don't spend it, so that actually my portfolio, the amount of capital in my portfolio, is increasing all the time. And because I'm reinvesting, it's actually lowering my average unit cost of shares. So that is a great tip for people who really want to build your wealth over time. Don't spend your dividends. What we want to know about dividends is we want to look at the gross dividends that are being issued out to shareholders, and we want to see that this number is increasing over time, because that's one of the ways that the companies can reward us shareholders when they don't really require so much money to be reinvested into the business. They will issue out dividends for us, so it's a nice gesture. And if the company is being run by people who are also shareholders, they are also enjoying their dividend payout. So it's really important to see that gross dividends is growing, and this also shows us that the company is managing its capital allocation pretty well. And if I'm not mistaken, that is what Warren Buffett prides to be the most important role of a company, which is to allocate capital and decide what to do with the money that they have in their companies, whether to grow the business or to reward shareholders. It's a win-win, right? So those are the four different numbers that we are going to focus on today. Another tip for all of us out here today who are budding stock investors is do compare these numbers across different companies within the same industry, because you're going to see pretty quickly who is growing the fastest, who is a better dividend payer, who is better at their margins. So it's very valuable when we look and analyze one company, but it is even more valuable if we actually look at the industry as a whole. Yeah, I think that is all I'm going to say today. So thank you so much for watching. I will see you in the next one. Bye. Oh, okay. Yeah, remember to subscribe if you like this kind of content, and hit the notification bell so you know when new videos are up, and comment down below. Maybe tell me about the companies that you are looking at and you are interested in analyzing. So thank you so much again for watching, and I will see you in the next one. Bye!